Okay, guys, welcome back. Day 3 of the short course series of videos in which I haven't counted. I don't know how many we are going to give, but we're going to try to make these videos very short and very precise. And as I'll be showing you a method that you guys can be using to trade and see consistency in terms of trading in price action. So, without too much talking, this is your Louis from Nice Pip speaking, and let's get down into business. So, the last time I taught you guys about market structure when I was showing you that about highs and lows in the market. I remember if you haven't checked, you can click the I on top of the video, or I'm gonna leave the link of day 1 and day 2 video in the description below. I was talking of the highs and the lows that define a trend that is in an uptrend. We see the market giving us series of higher highs and higher lows. I also spoke of the order blocks, the way I personally see order blocks, right? And I was saying that the last inverse candle in a trend responsible for a high or a low, that's an order block. That is, in this case, for example, if we have this push up right here and we have this bearish candle right here, not considering this one, but we have this clearly defined bearish candle that ultimately becomes my bullish order block like this, right? And the very last video I was talking about price action whenever it comes back to retest the zones of order blocks. Let's look, for example, if we have this push up, right? For this push up, for example, we have this black candle which represents an order block, a bullish order block. And I was talking about price action whenever price comes back to retest the zone of an order block, right? These are points of liquidity. These are areas in which these are institutional levels in which institutions are expected to be placing their orders, which is why I think they are called order blocks. So whenever price comes back, for example, if we have price rallying up like this, right, then we have it dropping down, right, considering that this is an order block, right? The moment price comes back to retest an order block, we need to create expectations. So in a scenario like this one, the expectations is that price may either push up, creating another high, which is why I target the previous high and hold for as much as the flow keeps going up, right? Or if this doesn't happen, price is either gonna break that order block, changing it from an order block to a breaking market structure. And when that happens, I anticipate or I expect that price may come back to retest either the breaker or the breaking market structure, then drop, changing the trend from bullish trend to a bearish trend. I hope that sounds clear. So today what I'm going to be doing is I'm going to go a little bit deeper in terms of this line of price analysis, and we're just going to look at some chart examples considering the whole theory. So let's start. So we do have a chart, random chart, step index on 4-hour chart, right? And what I just want to do, right, today is when I'm going to talk more about time frame. So what I need you guys to always know is have the market overall direction in terms of higher time frame, right? Always have an overview of what the daily chart is doing, what kind of order blocks are you having in daily, where is the trend going in daily chart on H4, right? But when we are trading, right, using this method of trading, we're going to focus more on 1 hour and 5-minute chart. So I do have my bullish push, right, on step index, right? I see a bullish push right here, and the market continue giving me series of higher highs, right? So what I want to do is I want to mark up the most recent order blocks on 1 hour. I want to mark up this is the first thing that you do. Mark up the most recent order blocks in 1 hour. For example, if I zoom in a little bit, right, I see that, okay, I see that the trend is dropping, right? And as the trend continues to drop, giving me a series of bearish order blocks, right? I see that the last order block was actually this one, right here, right? And it was retested first time, market drop, retested second time, right here, market drop, and retested again. Then what happened from there? It broke out, right? So when it broke out, I build expectations, right? I build expectation. The expectation whenever the market breaks out of an order block. Pardon that, guys. Expectation whenever market breaks out of an order block, I expect that it comes back to test the zone of break-in market structure, then pushes up. This is an expectation. So how do you go about price analysis? Let's look at a scenario of this push down, right? It's actually an order block, this push down. So what I'm gonna do is I'm gonna mark up the order block for the push down. Guys, make sure you understand this perfectly well, right? If you don't understand, please repeat the video, subscribe to the channel so that you keep on watching, and you keep on being notified whenever I post. Remember to give it a thumbs up. So I've marked up an order block for this drop, okay? Then the market came back right here to retest this order block, right? The market comes back to retest the order block. As soon as the market reaches the level of the order block, right? As soon as the market reaches the level of the order block on 1 hour, I'm dropping to 5-minute chart to look for entries, right? This is how the strategy works out. I'm gonna draft it. So this is what happened actually. Here is the zone of orders, the zone in which I marked the orders, right? The order block, right? Then this is all the time in which the price dropped down, right? Based on this order block. Then for this push up right here, this is when the market came back to revisit the order block. So as soon as the market reaches this zone of the order block, we are looking for one thing. We are looking for a break in market structure. We are looking for BMS, a break in market structure. So what are we doing? We are starting to look at the market. Obviously, the market structure, when price is coming back to the order flow, to the order block, I mean, is bullish, right? The market structure, for as much as the price is coming back to the order block, is bullish. Why? Because it's coming back to be, so this is a bullish order block. As soon as it gets here, because there is too much liquidity in an order block, I'm starting to look for a break in market structure. If the market structure upward is broken, it means I'm now expecting a bearish trend on a lower perspective. That's where I'm looking to take my entry. So let's look at how it happened right here. Market got to the order block right here, dropped, okay? You are not going to take an entry here. Why? Because there is no break in market structure. Why? I'm looking at this order block right here, right? And it wasn't broken, pushed up, right? It got here, pushed up, didn't create an order block because this eye is not actually higher than this one. Then it pushed up, created this order block, pushed up, came back to retest the order block. It didn't break the market structure, pushed higher, right? For this high right here, we do have, let me do this for neatness sake. I'm gonna remove this one, the blue, then I can just put a black line maybe so that it becomes clearly visible. 100%. So we have market pushing up, right, creating an order block right here, didn't break the market structure, push up higher, right, creating this order block which is responsible for this push up, right. It didn't actually break it, right, then it pushed higher. Now as soon as there is a break in market structure, that's where I'm looking to enter now, to enter a sell. Why do I could do this on 1 hour or on 4 hour or on whatever higher time frame, but I wouldn't want to do this on a higher time frame because movement of drawback from here up to here on 4 hour versus on 5 minutes, this is actually lower. So I'm looking to take my entry as soon as the order block or a candle closes outside, right? So that's what happens here. Candle closed outside. I'm putting my stop loss at the highs, right? The last highs in which it created. Price dropped, came back again to kind of retest. So this blue area right here of the break-in market structure actually represent an entry zone, a zone in which we take entries, right? So for this drop, price came back, you take more entries, more positions, that is if the account size allow, but your stop loss is right here and it's really tight, right? This is really tight, right? It's not something, this is something that you are actually willing to lose because there is always risk involved, right? Then boom, this is what happened, right? We have the market dropping. You're gonna notice that this happens in most cases, right? Let's look at I'm gonna pick a last example, maybe VIX 25 for example. Then I'm gonna push my 1 hour chart. See clear setups. I want to see something with a clear setup that I can use for demonstration purposes. Yeah, let's try this one. So we do have on our 1 hour chart, we have this order block right here responsible for this push low. Okay, now what I'm gonna do, I'm gonna mark up the order block, right? Then you know for a fact that whenever price comes back to retest the order block, it may drop, or you build expectations. It either drop, continuing with the flow, or it's gonna break it, right? So right here when price came back to revisit, as soon as price gets to that level of order block, I'm gonna put the black. I like putting black lines because when I erase the blue box, I still remain with the markup, guys. That's why I put black lines right here. So these black lines right here represent the order block, right? The order block. That's what the black line right here represent. And the blue area is actually the order block. So what price did, right, is on 1 hour chart, it actually visited the order block, what we call retest, right? Then from there, we are dropping to 5 minute chart. Obviously, I want you to know that obviously, if price created an order block, then ran away from the order block. When price is coming back to the order block, the market structure is bullish because it's actually pushing upward. So we want to wait for the upward push to be broken down, right? For the upward push to be broken so that the downward push begins, right? We have too much consolidation in the area, but the concept hold, right? Because we're gonna look at price got to the order block right here, right? Dropped a little bit, pushed up, created a what? An order block right here. Okay? Got here, didn't break it, pushed, broke it, right? It broke it right here, guys, right here. This is where it was broken. And I want you to look at something. If it was broken right here, right? If it was broken right here, it's normal for you to have your entry right here, okay? And obviously your stop loss is above the highs, right? This is the highs, this is the previous. So you have your stop loss somewhere above the highs. This was for the patient because it actually consolidated for a very long range. This is our entry bar and it holds because that's where there was a break in market structure. And look at it, guys, look at it. It took quite some time because it took quite a time consolidating within this range, right? But then the entry bar remains the entry bar and boom, this is what actually happened. This is what actually happened. But let's talk about the target. Let's talk about the target, right? How do you calculate the target? In my case, this would have been the target right here. And it was actually taken right. It was actually taken right there. Let me show you why. Because if we go back to the 1 hour, remember I said you are targeting the previous lows. Remember I said in an order flow, right? If we have something that looks like this, then we have a drop, then our order block is right here. Remember I said we are targeting the previous highs right here. This is what we are reaching for. So you are just targeting this. As soon as it's taken, that's your take profit number one. Then just keep holding another entry for as much as the flow keeps on going that direction. So here we do have a drop, right? In the order block responsible for the drop is right here, right? Then dropped lower and lower, came back to retest the zone of order block. So my target in this case is actually this drop right here, okay, because it's the drop that is for the order block that we are considering, right? And we have price taking the target, then push up just after it take out the target, right? So if we go back to 1 hour, we're gonna notice that the target was actually reached. It took long, but it actually reached the target before it reversed upward. So, 1, mark up the order blocks on 1 hour chart. 2, mark up the market structure on 5-minute chart. As soon as the market structure breaks on 5-minute chart, draw your entry bar, and this bar is where you take your entries. I hope this makes a difference, and this actually impacts create a new change. Guys, this is Nice Pips. If you think you like the content, if you have any questions pertaining to anything, please, my details are right there in the description box below. Remember to subscribe, turn on notifications for videos of this nature, and with all, I'm out, guys. Peace.